Welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Vunani Sentio Fund Managers. Thank you so much for your time, Imtiaz. Now, there seems to be improved sentiment in global markets as we start off the week. We're looking at the inflation in the U.S. for September that came out cooler than expected, but also less friction between the U.S. and China. Why is that not filtering through to the JSE?
Yeah, thanks, Zanati. I think what's playing out in the JSE today is exactly what's the opposite of what we've seen in the last few weeks. And that's the gold shares, which have come under significant pressure as we've seen tensions between the US and China subside. Gold has had a massive run, and just an interesting stat. Since the Bretton Woods era, gold was anchored around $35 an ounce. It took 38 years for gold to reach $1,000 an ounce in 2008. And then it took 12 years for gold to reach $2,000 in 2020. And then just 4 years to get to $3,000. And here's the crux of it. It took just 60 days to get to $4,000 from
Wow.
$3,000.
Wow.
So yeah, gold has had a massive run. And we saw a pullback. So gold was down by 3% today. And on the back of that, we saw gold fields down 10%, Anglo Gold, Harmony both down 9%. And because gold is such a large part of our index, that didn't filter through to the underlying overall index, although we had the likes of a Naspers and Prosus, which were up over 3% on the day.
Very, very interesting that the equity market is being ruled by gold. Well, even though we did have that pullback in gold, in the gold miners, the rand is still pretty strong against the US dollar, just above 17 rand 20. And I'm imagining that is a boost from South Africa being removed from the FATF grey list.
Yeah, I think it's a positive development for the country. We were put on the list in 2023, and just 2 years down the line, we are now off the list. I think there's still some measures in place that we need to adhere to make sure that we stay off that list. But nonetheless, it does bring about a higher level of investor confidence. There's less compliance work that needs to be done from a regulatory perspective. And I think we should see some positive flows from being off the list in a few months to a year down the line.
All right. Well, Imtiaz, let's get on to some of the news that came out from the JSE, company news that is. We did have interim results coming out from Pick n Pay. We did see an improvement in the financial metrics from growth and turnover to a narrowing of that loss in the bottom line. But the company highlighting a lag effect in Pick n Pay's like-for-like sales growth. We did see that share plunging over 7%. Is there concern here on the core business?
I think the turnaround is going to take a bit longer. Nonetheless, still pretty much within the guidelines that management have guided to. But when you do have a macroeconomic environment that is quite tough, as we are in South Africa, we've got a very strong rival that's opening a lot of stores. Pick n Pay is closing stores. They closed 14 stores during this period. And they also have to spend and make sure that they have the stores that are up to scratch, make sure that they have the appropriate training for their staff levels, which all culminates in expenses growing higher than your revenue growth. And on the back of that, you still have a loss-making entity. So I think it's a long journey. Turnaround stories are never easy. We saw their trading margin improve from -2% to -1.7%, but nonetheless still very much negative. There were some benefits from a higher interest income because they did raise capital and they did sell part of Boxer. And it's really Boxer that allows them to reinvest in the business whilst they're on this turnaround strategy.
All right. We'll talk about investments. We did have an announcement coming out from First Rand that it has made a strategic investment into Optasia. That's, of course, ahead of the fintech company's IPO that's coming from Ethos Capital. This is not the first transaction we've seen in the banking sector where a big bank has taken an interest in a fintech platform. What is the core of this trend?
Yeah, I think banks are very much aware of some of the startups that are there in the marketplace that's eating into their overall profitability. So this is pretty much a move by First Rand to have a strategic stake in the likes of Optasia, which does micro lending, and it will give them a very good idea of what's happening in that market, whereby they don't necessarily play very much in, but it also allows them to, buy up a bigger stake should this become a huge success. So I think it gives them optionality from that perspective, whilst also keeping an eye out on the trends that are happening at a very micro level.
All right. Well, let's get to your stock pick for today, Imtiaz. What are you choosing?
I'm going for also a bank, Nedbank. And, if you look at the likes of Nedbank and the other South African banks, they've come under significant pressure. They're not trading at very demanding multiples. Nedbank's trading at a PM ratio of 6.5 times. Its dividend yield is at 8.8%. And I think the exposure that they have with regards to the corporates and the property sector stands them very well to benefit from any improvement should we get that improvement coming through. And we've seen corporate balance sheets that are quite strong. There's lots of cash on the balance sheet. We've seen property activity starting to pick up. And the ROE, the return on equity expectations for Nedbank have certainly been reset lower. So I think a lot of bad news is priced in, and it's looking attractive at these levels.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Imtiaz. That was Imtiaz Suliman from Vunani Sentio Fund Managers.